Boom, it's rolling. Okay. Hey everybody, thanks so much for tuning into Young Money Investments. My name is Cameron Bennion, and tonight is the video you all have been waiting for. I'm super excited to share this video with you guys because this is probably the first step and one of the most important steps in getting swing trading going in your portfolio. So tonight, this is something that I kind of had thought about waiting and holding off on and sharing more on my premium content version and on my lesson library and in my course. But my thought is this, the course is going to be a lot more focused, and it's going to be a lot better in terms of teaching you guys in a step-by-step manner. Every video that I'm going to put on YouTube obviously has that same intent and the same purpose and everything like that. So I'm excited about that. But the purpose of the YouTube channel is just to kind of get everyone's feet wet. So you can still learn. You don't have to buy the course or things like that. But this is going to be really important because I guess maybe, I don't know if I should say, I think basically what I'm trying to say is the course is going to be really great for a step-by-step process and everything like that, and I think it's great for a lot of those that are serious. But if you're just trying to get your feet wet and you're trying to soak up and absorb as much information as possible, everything here on the computer is going to be really beneficial for you here on YouTube because it's going to essentially give you a little bit more information in large quantities. So although while it may not be kind of like a teacher would teach in class, it's going to give you kind of that same effect. So I'm excited to jump into a couple different things on this video. First off is we're going to talk about support and resistance lines and why those are important in terms of chart patterns and in terms of swing trading and day trading. For a lot of you that don't know what swing trading is, I know I use that term a lot if you follow me on Instagram. Swing trading is essentially like day trading. Day trading, you hold a stock for anywhere from a couple minutes to a whole day. Maybe sometimes a day trade could last, you could buy it right before the close of the bell, and maybe just hope for a gap up where over the aftermarket hours the stock is gapping up. Swing trading is a little bit different because it's a little bit less volatile. You're not going to have as many ups and downs and crazy swings like you normally have in day trades. But you're going to use the chart patterns and a lot of the patterns that I'm going to teach you on here in order to make smart, wise, valuable decisions in that step. So I'm excited to share this with you. I'm going to use Tesla as my basis for this right now, and I think that's pretty much where we're at. I'm trying to think. Support and resistance lines; those are going to be the big thing. We're also going to talk about what the exponential EMA is, the simple moving average or SMA. We're going to talk about the RSI indicators. We're also going to talk about the MACD, and the golden VWAP. That's not an indicator we're going to cover a whole bunch right now, but let's jump into it, and I can kind of go over everything with you in terms of how to start day trading or pattern trading based off of chart patterns. So let's jump into it. So we are going to clear out of this screen right here, and maybe I'll just minimize this right now. So we are going to, I'll slide this over here so you can still see me, but we can focus on the charts here. I'll scoot in a little bit here. So basically here on the TD Ameritrade Thinkorswim platform, you're going to see Tesla that I pulled up here. Couple different things basically that I have going on here. You have the volume or high volume being traded. As you can see right here, this big red candle, and maybe it's hard for you to see because I have it set up on the 180-day chart here, but if you zoom in, these little red and green lines are called candlesticks. So candlesticks are going to be very important because in some of the trading apps like Robinhood that you probably have right now, you just see a bar graph. You see a graph that's going back and forth, and it doesn't give you the information that you need in order to make a trade based on patterns. The candlestick charts are very important in that strategy. And so if you look on here, you're going to see a candle. Now, the body of the candle is going to be the open and the close of one particular day. Right now, these candles are depicting one day. Sometimes you can do like a 1 day, 1 hour, where each of these candles represent an hour, or sometimes you can even do like a 5-minute period of time, pardon me, or a 1-minute candlestick pattern. On this, for all intents and purposes, this is 180 days of chart information, or about 6 months. But if you zoom in here, you're going to see 1 day, 2 day, 3 days, 4 days, 5 days, 6 days, 7 days, 1 day, 2 days, so on and so forth. But basically what you want to see here, like I said, the body of the candle is the start and the close. On a red candle, the top here is going to be the start, the bottom is going to be the close. Now these little lines on top are going to be called the wicks. Wicks are basically the time, or the swing intraday. So for example, intraday, this particular day, Tesla was trading up here at about $355.40, but it also was as low as $345.92. So it was a lower, it at one point was lower than what the stock closed at the end of the day. So the wick is going to be the swing intraday for this particular chart pattern, and the body of the candle is going to be the start and the close. On a green candle, the start is going to be down here, and that's going to be where the stock opened on that particular day, and this is going to be where it closed. It had highs reaching up to about 350.18, whereas it closed at 349.77, so it was a little bit higher intraday is what we call it. Now, the next thing that we're going to talk about, this is the golden VWAP. That's for day trades and things like that. I'm not going to go over that in this video. We will potentially go and talk about that a little bit later in another video. But we are going to talk about the exponential moving average. Now, I like the exponential moving average a lot in terms of swing trades because it's going to give you an overall pattern. If we zoom in here, maybe I'll take, let me see, actually, I'll take this right here, this little section of it. And if you notice, as the EMA trends down and the stock starts to come down, you notice that as it trends below the EMA, that it's not a good buying opportunity. I don't like to usually buy when a stock is trending below the EMA, because that is usually a level of resistance for the stock to break above. So your exponential moving average is a mathematical equation essentially that is determined, is done, and determines a good buying and selling point. So for example, on here, you are going to, if you zoom in or look a little bit closer, which we could right in here, if you notice, it's trending below the EMA, trending below, it broke above a little bit, stayed below, stayed below, stayed below, came up, had an intraday high, it ended up closing right at the EMA, but it used it as a level of resistance. The stock did not want to break above, Tesla didn't want to break above, and it dropped down again. Again, it came up a little bit, but still is below the EMA. Had another red day, boom, we had a nice green day that broke us out of that EMA right down here at $305. Shot above, trending above the EMA, another green day, still trending above the EMA. A little bit of consolidation here, not much, dropped a little bit. Again, came up here to our resistance line. We can talk about that in a second. But as you notice, it's kind of staying in this consolidation pattern right here. It's not, we call it a consolidation pattern because it's not coming down below the EMA, but it's testing the EMA line. So in that test pattern right here, it's not really breaking below the EMA, but it's using it as a support system, showing that it's confirming that it's going to hold and trend above that EMA line, which is super important in your swing trades, especially if you're looking at needing to cut losses or not. So right here, you wouldn't have cut your loss and everything like that. Another massive green day we're showing right here, going from about 313, 314, all the way up to 326, and it just continues that uptrend pattern right through here, where it just continues to run above that EMA line. Massive green day, breaking through the resistance right here and continuing on a major uptrend pattern. Now, if you get in here, this is where it's going to be a little interesting. So you can see the EMA has kind of peaked out right in here. You notice that it's starting to trend down, obviously because it had that massive sell-off right here, which trended below the EMA, as well as the simple moving average, which is the green line right here. And you notice it really never recovers. It never really recovers above the EMA line. And so as it continues to trend down and keep coming down, it holds below that EMA. It comes up here, it tests the EMA as well as the simple moving average, the SMA, and then continues to just have these sell-offs till it does reach support here. But what happens is this was not really a great level of support. It did come down. Notice it consolidated those little bitty green dots right there, if you can notice. Then it broke below, and again, you don't want to really stay in that anymore. Whoops, I ended up drawing here. You'll notice then it comes up here, it tries to test this support, or sorry, this resistance, because old support levels do become new resistance. It drops back down again, and then it is finally able to break above, has a little bit of an uptrend pattern right here, and then you notice again it has a massive red day breaking back down, comes back up, continues to consolidate, and then we do have a massive push up above that EMA line and continue. So those are some of the important patterns. Like I said, the EMA for me is really important because that is going to be a key indicator that I personally use to know if a swing trade is a good position or not. I like to see it break above the EMA, this consolidation channel right here, test the EMA and bounce. It essentially bounces off that EMA line and then continues on up, which I think is super cool. The other things we want to talk about here are the support line, or sorry, support, which would be this line right here, resistance, which would be right here. Tesla tends to be trending very horizontally right now. We're not seeing a big push like we did last year in Tesla. Granted, it didn't start until spring, summer, when Tesla was really having that crazy ride. But what you can do is, I also like to draw in support and resistance lines. These things are going to be very crucial in order to understanding where it's going to have basically a floor and where the ceiling is and at what point you would want to potentially sell out on. So if you notice right here, if you were to continue that line as it goes straight through here, you would see these stocks continue, or sorry, these price points rode very similarly along this red line that I have drawn in here, right? It touches all through here. We did have a little shoot up, but then if you kept down here, touched here, a little bit more above that line, and then you continue over, and obviously, you continue to go over there. But if you use this red resistance again as well, you'll notice touched here, touched here, touched here, touched here. We had a little bit of a peak up here to about 345, and then we had another sell-off. But that does kind of coincide with this little bit of support, or resistance, pardon me, that we had previously, looking back on, I want to say this was December 11th, roughly. December 11th, December 15th. So if we take this pattern and everything, I want to use Tesla as a good example for my future plans. So I love this pattern right here because it's been very predictable, very predictable as far as what Tesla is going to do. It usually has a bottom, and if we use this as support, you'll notice, look right here, as it had that massive sell-off that came down here. You could almost say that there's a support line right here at 297. I have a support right here at 315. But I would also venture to say that we have a pretty solid floor right here at about $398, $300. So I'm going to draw that in right here because I see, and this is again my personal preference, I'm not telling you guys to do this, I'm just telling you where I see value and what I'm going to do personally. So I see all this consolidation here, touch. You see it again, it came up here, hit resistance, this became resistance for this little pattern, came down here and touched, rode it up, was able to break above and continued on upward. Again, came down, didn't reach, touched at about 304, and this was 298, so about an $8 difference right there. Came back up, broke through broke through resistance, came up here, this was support, broke through that resistance, which then became support, came up here, touched, and then sold all the way down, breaking through that level of support, that floor right there, and using that level of that would have been support, and then comes all the way down here. And then we had quite a big, massive buy-in, and if you notice, the potential for profit here is massive. I mean, you look at that, you're looking at a total percent profit of about 19.96%, and 20%. that is pretty dang good. If you could have a swing trade that can bring you 20%, and obviously it hasn't always done that, but you're looking at a time period of about, I would say, probably February 5th all the way until February 28th. So a 2 to 3 week time period, you make 20% on your investment. That's pretty nice. Let's say you have a $1,000 position, you just made a $200 gain. Let's say you have a $10,000 position, that just made you $2,000. You have a $50,000 per position there, you just made $10,000. So there's a lot of money to be made in these patterns and everything like that. I plan on, based on these previous chart patterns, and like I said, really seeing resistance or support right in here, plan on buying somewhere between $315 and $300 in the next sell-off. You'll notice right here we've had it come down, we've had a run up, and you'll notice it's in a descending pattern where it's trending below the EMA line. SMA is also pointing down and everything like that, which this can also be used as resistance. Like I said, this is also a resistance line as well as that green SMA line. But I tend to see, like I said, Tesla continuing to sell off over the next week or so. And that for me is a great thing because I am an opportunistic buyer. So as Tesla continues to trend down, I'll kind of take that pattern from right here. I plan on taking probably a $50,000 position in Tesla. Again, this isn't a buy recommendation. It's not a sell recommendation. I'm not telling you where to buy in. I'm not telling you where to sell out. But I see a lot of value in Tesla because of this pattern, as you can watch on here. It's been fairly consistent. I mean, it's about as consistent as you can want to get, as well as it being a multi-billion-dollar company. My goal is to be able to pay for at least a nice little down payment on my Model 3 that's coming in July with the profits from Tesla. So I just think it's kind of cool that, you know, with Tesla, being able to pay for my car with a lot of the profits and proceeds that I make off of this. I had a position in Tesla last summer that was about a $50,000 position as well. And that made me about $6,000, I think, is what I profited off of it. I held it a little bit longer. I should have sold out earlier. I was up several $1,000s more, but I got greedy, and greed is the killer of gains. So basically that is what I wanted to cover here in this video. I know there's a lot of information. It's more than I normally cover and everything in my videos and things like that. But because the SMA, EMA, all those chart patterns are really important, I wanted to get pretty in depth with that. For the most part, I know it's not super in depth and it's a lot of information to take in. So if you stuck with me through all that, like I said, I'm glad that you were there. So if you have any questions or anything like that, please feel free to leave them down in the comment section and everything for me. I'd be more than happy to answer your questions that you have about it. I'm trying to think of anything else. I don't want to waste a whole bunch of time. Hopefully this video has been helpful for you. Will you please, if you would like, hit that like button for me. That helps me to know if I should continue to make videos like this. Comment down there. Please subscribe if you haven't already. There will be a lot more videos like this, kind of explaining my positions in these swing trades and things like that. You know, maybe what I'll even do is I can maybe even post some of my long positions that I'm doing. If you'd like that, if you'd like to know, so before I get my lesson library and my course and everything like that created, what I'm going to do is probably post some of those things up on YouTube for y'all. So hopefully y'all enjoyed the video. I'm so glad that y'all have stuck through everything. I love sharing all this great stuff with y'all. So thanks so much. Have a great day, and I will talk to you later. Bye.